The first 30 days of this new challenge, did it do what we expected? So I drew this account down on May 31st to about $1,000. I purchased options based on the signal to hold over the weekend. And as you can see, before the market closed, it went up $1.34. But then June 3rd, our month of trading began. And you can see I didn't go up very much, and then I went down actually below 1,000. Then I went up solidly, kept going, ups and downs as expected. Obviously a couple big up days, which were very helpful. We continued all the way to the end, where I ended up at just over 40% for the month of June. When I put in exactly what my month looked like, $1,000, average of 10% position size, 72% win rate, and 18 trades, I didn't trade one day, the Monte Carlo is almost exact. That just means I did average in June. Over 40%? Well, that's pretty good. I think the answer is pretty straightforward. I got out of my own way. Let me show you how. We're overnight swing traders, and there are three parts to our trade. First is the time. We buy at the end of the trading day, and we sell usually the next morning. And then there are different types of trades. There are ratio trades or small directional trades, depending on how aggressive or conservative we want to be. But one of the most important parts of the three is the signal. And I spent a good 3.5 years working on that signal, and it finally came to fruition in a consistent manner last July. Once it was done, it allowed me to develop other features and support systems to that signal, such as the probability number, which is extremely powerful. I have a few videos on that if you're interested, as well as the confidence numbers and other algorithms to compare the main up and down signal to. Once I had enough support features to help me determine how aggressive or conservative I wanted to be in my overnight trade, I started looking at types of trades and better ways of trading to be more consistent. If I'm really honest with myself and looking back over my trades, my biggest failures had one consistent and common thread, and that was me. Me trying to make up for bad trades. Me trying to time the exit of that trade perfectly. And honestly, that's where my biggest losses have always come from. Doubling down. In other words, me knowing better than the market, which of course is never the case. But there's a way to fix this. I often say buying is important, but selling is what makes a great trader. And being consistent in your exit will make you a great trader. And so to get out of your own way, there's one thing that we need to do. I'll share that in a moment. But let's talk about buying first. When we consider our overnight trade, there are a number of things to consider, and that's why I developed the level system, and I have some videos on that, and I'll do more videos in the future. The first level is very basic. You do the exact same thing every single day. You buy the same ETF or stock or option or combination of options, whatever you want, at the same time, at about the same expiration date if you're trading options. In other words, there's not much to think about other than is it going to go up or down the following trading day. Over time, you may want to move up levels, but this has nothing to do with your skill as a trader, but maybe more options to make it more interesting, and it'll allow you to take advantage of other indicators or a combination of indicators as well as, say, the probability or confidence numbers. And so you may decide on different ETFs or stocks during different types of markets, or you may consider ratio trades, for example, versus directional trades. You may trade 2 or 3 or 4 or 5 to 1 depending on the type of market and how aggressive you want to be. And as you work your way up to number 5 is pretty much all the way through to the next morning where you're exiting manually. But when we're doing level 1, well, that's automatic. And that's how I got out of my own way. I would buy my options at the end of the trading day based off the signal and the confidence number, and I may consider a different ETF option or not. And then once I buy, I then set the exit time the next morning. In other words, I am not going to manually exit. I'm going to wait for a specific time. Now that time could be right at the market open, or maybe 10 o'clock or 10:30 or 11, or even 1 in the afternoon. For me, I have found by looking at the different charts that 11 o'clock seems to work out pretty well to maximize my opportunities. And honestly, last month, it worked out pretty well. And yes, it did take a different type of discipline, as sometimes I would watch the market open and my profits would slowly slip away. But I had to remember the days in which the market may have opened flat but then started going my direction, and I ended up doing much better than I would have if I had sold first thing in the morning. But honestly, you have to find an exit time that is right for you and your style of trading. Another reason I think I did really well is because my indicator at SPY Tomorrow was well over the 65% I use in my simulations. It was actually between 70 and 75% correct through the month. And that, of course, added to the opportunity for a lot bigger gains. Now let me tell you about the day I didn't follow the plan. As I mentioned before, there were days in which I was watching the market before my official exit and my trigger finger was ready to go. But I'm proud to say I didn't fall victim to that. I always waited until the exact automated time. I never got out early, and it turns out that was the right move. However, there was a time in which the IWM, which I was trading, seemed to start moving the opposite direction of the SPY, which is what our algorithm is based off of. And I know that sometimes when it does that, it may do that for a few days. So I switched over to the QQQ. And the next day, IWM had a big move. Yeah, it's those big moves, whether it's 1, 2, 3, or 4 big moves during the month that will make your month. And that's why you need to be there. Trade as often as you can. Now, there was one day I didn't trade last month, and that's because my indicator was neutral and there was no real clear direction, and I didn't want to just guess, so I stayed out of the market. But I try to stay in as often as I can because I know those big moves are the ones that will make for a happy gain at the end of the 30-day challenge. Although my exit is automated, there are a number of considerations when I buy to determine how aggressive or conservative I want to be, quite often based off of the probability number, such as how far out are the expirations of my options. 4 to 6 days, 4 to 8 days, that's pretty aggressive, but I'll also get bigger moves. But if I want to be more conservative, or maybe over a long weekend, I may look at 10, 14, or even 20 days out for my expiration. When I'm considering how aggressive or conservative I want to be, I'll also consider the type of trade that I'm making. Do I want to make a small directional trade, which can be very profitable, and I like doing those. But if I want to protect myself with a hedge, well, I need to be using options, and there, if my indicator says up, I might consider a 4 or 5 to 1 options ratio, meaning I'll buy 4 or 5 calls and 1 put as a hedge if my indicator said up. But if I wanted to be a little more conservative, I might consider a 2 to 1 or 3 to 1 options ratio. Again, all considering the type of ETF or stock that I'm trading and the IV of the underlying stock. That's important to consider because you can always have an IV crush take you out if you're too conservative. Of course, an IV crush, well, it's really never good for a SPY T trader. So last month was a winner. I got out of my own way. At the end of the trading day, I looked at my indicator, which was correct over 70% of the time. And I considered how aggressive I wanted to be based off of my probability number. And then I would buy my positions at the end of the trading day, and I would set them to automatically sell around 11 o'clock the following trading day. I didn't get in my own way by trying to double down or make up for bad trades or trying to find the peak moment to sell. I just followed the system. And I'll see you in the next video.